using the blockchain payment rails in lieu of Swift and ACH and all this other crap that we have in the world. Doing borrowing and lending through DeFi, and transacting securities through smart contracts, blockchain, basically highly efficient, so efficient that you can afford to trade small amounts of private securities and still have it be economic.
Mm-hmm.
So trading, payments, financing, underwriting would be the other thing. I'm talking to people who are doing that too.
That's something that's a piece that I'm going to get very interested in, because I think that's something that's absolutely missing. And you only have so many people that in the world that actually knows this aspect. Because the underwriting part, you need to have underwriting knowledge, you need to have tech knowledge, you need to have economics knowledge and financial knowledge to put them all together. Yeah. Right now, there's only Nexus Mutual that is doing that. And because, I think there's
Nexus Mutual?
Yeah.
Oh. Is that that's a fintech startup? Or?
That's a crypto insurance.
Okay. Wow. That's cool. I got to check them out.
Only them doing that. But yeah, you're right. Financing, security, underwriting, and what's the other one? Payments. So that's like absolutely super fascinating, because with the whole, like DeFi or not DeFi doesn't matter, because all this DeFi stuff is just built upon a technological stack. It can be a centralized technological stack. It's like, it still works. So the only thing is that it's more efficient because we are reducing these intermediaries, and these intermediaries are taking so much of the profit. They're taking so much margin. So right now we have this margin available. And that's exactly what I was talking to, like the lawyer that, like the lawyer, which is the ex-MAS person or ex-central bank person that we want to work with. And by taking away these intermediaries, you have a lot of margins available to be distributed. So the whole DeFi thing and the whole aspects of redesigning the financial market is, how the hell do you distribute these margins equitably or fairly to everyone that's in the space, which I guess is the fun part. And right now it's so fun because DeFi or not DeFi, in new finance or next generation finance, it's building blocks of little protocols. Borrowing, lending, very cool. I have a lot of projects asking me to build the protocols and build the economics of these protocols. Going to be a big thing. Right now, it's very much on crypto to crypto, but soon, once you do on-chain, off-chain solutions with all these incentives mechanisms, very, very fun. Then you have like portfolio management. Portfolio management, instead of reallocating, instead of rebalancing with your broker and someone doing that, you automate all these business logics with smart contracts. Absolutely.
Right. Yep. And bonding curves.
Yes.
My friend Lisa taught me.
Then you also have all these, who cares about order books anymore? You don't need order books. You have machines doing the order books for you. You have machines, well, not bots, but machines doing all these buying and selling, providing liquidity, having, and then instead of, one of the shift would be, instead of lender of last resort, which is what central banks do, with all these liquidity exchanges and stuff like that, you are basically the issuer of first resort. So instead of being the one that is at the end having to save everyone, you're basically incentivizing people to keep using your system by you starting to provide liquidity, and then everyone will join depending on your incentives. And then you have all these different things that's available, which is really, really cool, and that revolutionize everything. With payments, so with payments, we talked about money before, and there are two types of money in economics. You have money that is based on the asset itself. So the asset is valuable. So like Bitcoin is valuable because of the asset. Gold is valuable because of whatever. And right now we are talking, like, we call that commodity money, or we call that metalist money. And that is still a very physical thing. What we are doing with the crypto space is to create synthetic or algorithmically synthetic commodity money, which is very, very fun. And then the other one is the charterless money I mentioned, that is where money is just debt. So you can either continue on, just bring this like gold to the digital space, which is commodity money to synthetic commodity money, or you can
Right.
or you can combine it with like central bank fiat money form.
Yeah.
And then you
Charterless.
make like a 2 token system, so that one of them is the I won't call it stable. It's more pegged to a basket of goods. So
Right.
it's for payments. And you can also, with that peg, instead of 10, 20 Powells coming together and say, okay, this is how we're going to adjust the interest rates and all that kind of stuff, machines do that. Machines will re-evaluating and providing that stability, which is different from stability in the US, because we're talking about zero inflation, zero monetary inflation stability, or within a specific bandwidth.
Yeah, right. Manageable.
Yeah, manageable. And then you can code that in. Like, these are all business logics that you can code in. And then your secondary market, it's all your investors. So in the traditional world, that'd be your bonds people buying all these treasury bonds. But right now you instead of that, you have a secondary market to support this payments, like zero inflation payment tokens or payment currency. And then they can be doing all your additional trade and secondary market stuff to be supporting this your currency. So then you're providing the both synthetic commodity money together with the charterless money of the fiat world, which in the form of a secondary token. Like, that's super cool. I don't know why no one's doing that.
Right. Well, it's a very innovative thought you've put out there. I mean, it's not. I think people have been conditioned. I know certainly my generation has been conditioned to think of it as either or. And you're basically replacing the or with an and you're tying them together with a bonding curve of some kind and some kind of mechanism for, it's like exactly what Compound is doing in terms of the borrowing and lending of some particular, tokens. But this is really now stepping out of the crypto or the token world, in effect, and getting into the digital money. That's charterless, and then the sort of the digital, whatever you want to call it. I don't want to use the word token, but also the digital representation of a medalist money. And then, like, okay, boom, have at it, guys, because there's really no friction between these, and you can have, you've got an immense number of forces betting. I mean, I guess you could say that's happening in the price of gold every day. But you don't really, the supply isn't really known, for one thing, and the supply is also dynamic. It's unknowable, it's dynamic, and it's also very inefficient, right? There really aren't that many people carefully looking at monetary policy and carefully looking at fiscal policy and looking at it globally and trying to tie all this together and come up with the price. It's just so much easier to throw a million bots at it. And it's like the M&M jar. I mean, you're just going to get better answers in terms of how many M&Ms are in that jar. So that's very cool. That's an incredible. Like, you should write something about that, because I don't think anybody else is thinking that way. Not that I.
And this is just like stage one. And because we're talking about payments, right? And where does payments get exciting is where all the interest comes in. That's where you have all these building blocks of lending, borrowing protocols. But the other aspect is also that all these lending and borrowing protocols, they have to coordinate. And how do they coordinate? And I like to look at what's going on in the real world and then try to apply it into the digital world by making it more efficient. And if you look at Libor, if you look at SOFR, you look at all these, whatever, something with R at the end of all these central banks in the world, there are a lot of ways to coordinate all these interest rates. So, what if we have a global payment system, and it could be, any currency that you want to use, that's fine, because it's all about distribution. But in a layer 2 kind of coordination, we have this level of interest rates or whatever R at the end to coordinate all these different borrowing protocols. And that's something that's not done yet. The closest that I can think of is like YFI, but that's really on the governance token side. That's not really money. That's like utility token, which doesn't really excite institutional players. But if we look at it from a currency perspective, that would be like fucking fun.
Yes, absolutely. I mean, you think about all these trades people do, right? So they'll they'll do, they'll buy they'll buy a bond that's denominated in foreign currency, and then they'll go into the cross currency swap market and hedge everything back to their home currency, and that creates a yield, right?
Yep.
But that trade, first of all, is only available to the most sophisticated people in the financial ecosystem. And it can only be done in scale. And why? I mean, this is going to sound crazy. Well, maybe it won't sound that crazy, but in the same way that if I'm just going to unleash my Bitcoin into the DeFi, if I'm going to let BlockFi or some other company, essentially go out into that ecosystem for me and find the best deals and pay me a rate on it and whatever, why would I not take any cash that I have? Okay, if there's a digital USD, a digital Japanese yen, a digital this, that, and the other thing, and there are these, why am I forgetting the name of the? It's the one that Compound. If there's sort of the analog of Compound out there, just intermediating the flows of, you want to borrow yen, this is what's going to cost you. You want to lend it, this is what you get, and just have all these maybe it's done bilaterally, but effectively becomes multilateral exchanges that are taking place. And I know there are people out there that are watching this stuff they're knitting this together in a very labor-intensive way and harvesting, but being rewarded incredibly well for their efforts, because all this crap is out there and none of it reconciles at this point, because there isn't enough participation and there isn't enough integration to make that happen. And there's just huge money being made in the meantime, while all of that froth and slop works its way out of the system. But we haven't even touched the main financial ecosystem. And imagine, when you can start to do that in a more efficient way, how, and now, like, who needs to have sanctions? Who needs to have, like, people will be rewarded or punished immediately for their fiscal policy, for their export, their balance of trade deficit or surplus. Like, feels like where it's all going. Yeah.
It's so exciting because you can code all these, you can transfer all these business logics or these systems that we want to have in place. You can automate a huge chunk of them to machines, and then you've got people coming in to make smaller tweaks and changes.
Yep.
And that's mind-blowingly super fun.
Yeah. Because the whole blockchain world, it's attracting so many people right now. In fact, it's probably attracting too many people, you could say. And all of that energy and talent and ideas, all that stuff is going to have to go. My point is, as a lot of people are coming from the traditional finance world, and they're going to be having moments just like the moment you and I are having right now as they're talking. And they go, wait a second, like, why are we doing repo in this stupid way? Why are we doing cross-currency swaps in a stupid way?
Yes.
Like, let's do a startup. Let's get after it. Because there's no room for us left in this trade. So let's go let's go create our own trade. And that's really what the best innovators on Wall Street or in the financial world in general, or the monetary world in general do. And
so what can we do to kick the Wall Street butts?
Exactly. That's where this all started.